The current market status for Datavault AI Inc. is closed as we are looking at the data following the session on Friday, January 9, 2026. The stock, trading under the ticker symbol DVLT on the NASDAQ, finished the day at a price of $0.9163 per share. This represents a decline of 9.28% during the Friday session, a sharp pullback that followed a week of extreme volatility and massive trading volume. While the market is currently inactive for the weekend, the after-hours activity showed a slight stabilization around the $0.92 mark, suggesting that the aggressive selling pressure seen during the final hours of Friday might be catching a breath. To put this in perspective, the volume on Friday alone was a staggering 158 million shares, which is nearly double the average daily turnover. When you see a small-cap company trade its entire market capitalization in a single afternoon, something significant is happening beneath the surface that standard technical charts might miss. Most people looking at the screen right now see a penny stock that just lost 10% of its value, but the reality is that Datavault AI has been one of the most discussed tickers on platforms like the Robinhood app and Interactive Brokers this week. The expectation was that the momentum from earlier in the week, fueled by news of a special warrant dividend, would carry the stock well above the $1 threshold and keep it there. Instead, the reality we are facing is a classic liquidity event where early entrants took their profits, leaving the latecomers to wonder if the underlying business transformation has enough weight to support these levels. It is the kind of situation where self-investing requires a high degree of emotional control because the swings are not just based on math, they're based on a complex web of corporate rebranding and a very unusual strategy involving digital assets. You might have heard about this company back when it was called WiSA Technologies. They were primarily known for wireless audio standards, but they recently decided to pivot toward a more expansive vision of data valuation. This shift is where the tension between expectation and reality becomes most apparent. The market wants to believe this is a new AI-driven powerhouse, but the financial statements show a company that is still finding its footing. On the Robinhood trading platform and other investing sites, the chatter has been dominated by the announcement of a warrant distribution set for February 21st. Usually, a dividend is a straightforward reward for shareholders, but this one has a twist that sounds more like a modern experiment than a traditional corporate action. To exercise these warrants at the $5 strike price, holders are required to possess a specific meme coin called the Dream Bowl token. This is a move that bridges the gap between traditional equity and the decentralized finance world, and it has naturally polarized the community of people who use SoFi Invest or Fidelity for their long-term retirement planning. If you are currently holding a position, comment below how many shares of Datavault AI you are currently holding and whether you plan to participate in this warrant exercise. It's a unique scenario that we do not see often in the NASDAQ small-cap space, and your perspective on this strategy helps clarify how retail sentiment is shifting. When we examine the recent daily swings, the volatility has been breathtaking. Earlier in the week, the stock surged over 50% on news of a partnership with AP Global Holdings for a nationwide deployment of their infrastructure. This was supposed to be the catalyst that proved the company's ability to scale. However, the Friday sell-off was likely exacerbated by a filing showing that a major shareholder liquidated over 14 million shares. This is the reality of small-cap investing. Even the best news can be neutralized by a single large entity needing an exit. For someone using a Fidelity trading platform or an individual brokerage, seeing that kind of institutional exit can be jarring, especially when the retail narrative is so bullish. It forces us to ask if the professionals know something about the long-term dilution that the average trader is overlooking. The business model itself is now split into two distinct parts, the Acoustic Science Division and the Data Science Division. The acoustic side still holds the legacy WiSA technology, which handles high-definition wireless sound. This is solid, patented intellectual property that has been used by major consumer electronics brands. But the new growth engine is the Information Data Exchange, or IDE. The idea here is to create digital twins of real-world assets and use blockchain metadata to value and monetize them. They're essentially trying to build a clearinghouse for data where privacy and credentials are baked into the system. It's a bold move, and they recently activated edge network infrastructure in New York and Philadelphia to support this. They expect this network to be fully operational by the second quarter, which could be a significant catalyst if they can actually start showing consistent revenue from it. For those of you who prefer the simplicity of Schwab Intelligent Portfolios or a SoFi robo-advisor, a stock like DVLT likely feels like an outlier. It's a high-risk, high-reward play that requires active management rather than a set-it-and-forget-it approach. The recent earnings report showed that the company is still losing capital, with a negative earnings per share of over $3 on a trailing 12-month basis. This is why they're filing prospectus supplements to register millions of new shares. They need the cash to fund their acquisitions and keep the lights on while they build out this ambitious data network. Dilution is the biggest risk here. Every time they issue new shares to acquire intellectual property or to raise working capital, the piece of the pie owned by current shareholders gets smaller. This is a reality that often gets lost in the excitement of a 20% pre-market pump. If we look at the broader sector momentum, AI-related infrastructure is still a hot space. While Nvidia stock and Apple stock dominate the headlines for the large-cap indices, the smaller players are trying to find niche applications for the same technology. Datavault AI is betting that the monetization of data at the edge, meaning closer to where the data is actually generated, will be the next big trend. This puts them in a different category than a pure software-as-a-service company. They're building physical infrastructure combined with proprietary algorithms. If they can successfully integrate with the IBM ecosystem as they have claimed in recent updates, the potential for enterprise-level adoption increases significantly. But as of right now, much of this is still in the letter of intent or partnership phase, which provides more hope than hard revenue. The institutional activity has been interesting to watch on the Fidelity mobile app and other institutional tracking tools. We see names like Vanguard and Jeed Capital holding small positions, but the majority of the movement is driven by retail interest. This is evidenced by the massive surge in transactional activity on social trading platforms. When a stock becomes a trending ticker on the Robinhood app, it often leads to a feedback loop where price action is driven more by sentiment than by the underlying balance sheet. This is why we saw the price swing from a 52-week low of $0.25 to a high of $4.10 before settling back into the current range. It's a battleground between those who see a transformative data company and those who see a heavily diluted microcap trying to catch the AI wave. For anyone who does online investing or uses a Fidelity brokerage for their self-investing needs, the lesson here is one of patience and risk management. The company has projected that it could have over $125 million in liquid assets by the end of the year if its recent acquisitions and capital raises go as planned. If they achieve that, the current market cap of around $500 million might actually look reasonable. But that's a big if. It requires the market to accept their valuation of their own intellectual property, which is often a point of contention during audits and SEC filings. The recent registration of 7.5 million shares for an intellectual property acquisition is a perfect example. On paper, it grows the company's assets, but it also puts more supply on the market, which can cap the upside for the price share. Looking ahead, there are a few scenarios that could play out. In the bullish case, the February 21st warrant distribution goes smoothly. The Dream Bowl token integration creates a unique ecosystem of engaged investors, and the Edge network in major cities begins to generate recognized licensing revenue. If that happens, the stock could easily retest its previous highs. In the bearish case, the dilution continues to outpace the revenue growth, and the unique warrant structure proves too complex for the average investor to bother with, leading to a slow bleed back toward the lower end of its 52-week range. The fact that the stock is currently trading below the $1 mark is also a concern for its continued listing on the NASDAQ, as they will need to maintain a certain price level to avoid a delisting notice. The reality of Datavault AI is that it is a company in the middle of a profound transition. It has shed its old identity and is trying to convince the world it is part of the next wave of data science, but the market is currently in a show-me mode. It's one thing to announce a partnership with a large entity or a nationwide deployment plan. It's another to show the cash flow on the bottom line. For those of you managing your own portfolios on Interactive Brokers or using Fidelity Wealth Management Services, this stock represents a tactical play on the intersection of AI and data monetization. It's not a core holding for a conservative portfolio, but it's certainly a fascinating case study in how modern companies are using everything from blockchain to meme coins to attract capital and build a brand. To summarize the central insights of the week, we have seen a stock that has been pushed to its limits by a combination of positive news and heavy selling by major insiders. The expectation was a sustained breakout, but the reality was a necessary correction after an overheated move. The warrant dividend remains the most intriguing catalyst